JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 6th of August 2020, so yep, welcome everyone. Welcome to this Thursday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always guys, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Which will take you to our, like I said, our page, which we update on a daily basis, and I believe you can find it useful. So now then, a quick update on what's happening here globally. So the figure continues to rise, of course. Here, for example, on this source, we can see that the number is around 18,800,000. However, other sources suggest that we are at around 19 million already. So basically, we did have a bit of a spike yesterday. However, it wasn't as big as the previous one. So I can see that here is probably not really updated yet. So basically, we'll have a little kind of candle here to the upside, or bar to the upside, but not as big as this one. So basically, what I was saying previously, that of course, when I was what I was saying in the beginning of this week, what I was saying, that it, in a way, every single kind of heavy drop here, we do have another strong uprise. So yeah, unfortunately that's the case. We'll continue monitoring this, and we'll continue watching it and seeing how the market, how this affects the market. For now, if we jump into Nikkei, for example, so this week, in the beginning of this week, I was saying that keep your eyes on this little level right here, the 22,285. A push above it may open the door towards slightly higher levels, where we could aim for this downside resistance line taken from the high of the 9th of June. Yep, for now you can see that it did make its way higher. However, right now we're seeing a bit of a correction here, but the price still remains around near the 21-day EMA. So all this is kind of still looking quite okay-ish. So there is still a chance for this index to push a little bit higher here. However, if the index starts moving back below the 22,285 territory, and let me just recycle this line and reuse it. So if we get a drop back below the 22,285 territory, then maybe we could see a bit of a correction here and back down towards these EMAs, the 100-day EMA and the 200-day EMA, shown as the green and the black line respectively. For now, it's a little bit of a difficult one. As long as it continues to hang around here somewhere near this 21-day EMA, there is still a good chance for this index to drift higher towards this downside line. And if this downside line gets broken, then of course this is where it could become a little bit more exciting for the buyers. But again, let's keep it short and simple for now. Let's see how all this is going to play out, but keep your eyes on the 22,285 territory. Let's see if this continues to provide support. Jumping into Shanghai Composite, this one is in the red slightly today, so it did try to make its move higher, but for now it seems that it wants to continue kind of looking at this scenario that I showed earlier, the potential kind of correction lower and then a push higher. So we got the, I would say we got the half of this idea done. We did get a correction towards this level, towards this 3,336 zone, but we're not really seeing a rebound from it. So maybe it might take time a little bit, but yeah, for now, I'll probably take a bit of a cautiously bullish approach. There is still a possibility for this one to move higher, especially if it continues to balance above the 3,336 territory. But if it suddenly drops below it, and previously I talked about this level right here, the 3,288 zone, now probably this will have to be adjusted a little bit. So first of all, let me just move this arrow here. Let me remove this downside line, no longer needed. So in other words, how you could look at this is, and let me just actually probably take away this level here. This was the highest point of 2019, but no longer kind of interested in that because we got a violation of it. So basically what we're going to do here is we're going to keep an eye on somewhere around here near the 3,282 territory. At the same time, if we get a drop below this area, then this could push the price below the 21-day EMA as well, and maybe we could see maybe a revisit of this 3,181 zone, which could provide some resistance, some support again. Now jumping into German DAX, the index closed yesterday, well, slightly in the green, but below the 21-day EMA. So this kind of makes us a little bit worried, but still the same idea remains, the one that I was mentioning previously. We need to see a push above that 12,773 territory before examining higher levels. In terms of the downside, we need to see a drop back below this downside line, or even better, a drop below the 12,254 territory in order to kind of aim for some lower levels. So again, not much has changed. Like I said, the same scenario remains. So let's keep an eye on those levels. Now jumping into DXY, another index, and this one is moving lower again. So yesterday drifted lower, but found good support near the lowest point of July here, near around the 92.55 zone. It failed to kind of drop below it. Today we're seeing another test of this area, but yeah, of course, now the big question: can we see a daily candle closing below this? Because that's what we're looking here for in order to aim for some further declines, because this would confirm a forthcoming lower low, of course, and potentially could open the door towards slightly lower levels. Now, one of which is this one right here, and let me just grab a line. One of which is this one right here. That's the low of the lowest point of May of 2018. Let me just double check that very quickly. No, sorry, that's the lowest point of 15th of May. Let me just correct myself very quickly. So 14th of May 2018. Low is the 19.224 territory, so that's going to be our next target here. The low of the 14th of May 2018, that's what we're going to be aiming for if we get a nice daily close. And now I do understand it's very close here, but nevertheless, let's be careful here, because the index is already overstretched here to the downside. So any little kind of support might prove itself a significant one, and we could see this one reversing to the upside. So be very careful here for now. Now gold is of course enjoying the fact that the US dollar is declining. It is pushing higher. And yesterday, for example, it created during the day, and not after I've done the morning video, and actually I think it was also after the traders tea time as well, because it formed a new all-time high here near the 2055 mark. This morning we're seeing another push higher here, and as I've mentioned yesterday as well, that in a way, in order to aim for some higher levels, we just need to kind of wait for a break of the previous high, because such a move would confirm a forthcoming higher high, and well, I mean, then we could see the commodity traveling further north. But again, it's very difficult to find a good resistance somewhere, because, well, for obvious reasons, we are at the all-time highs. For now, it's a difficult one. Again, keep your eyes on the yesterday's highest point and the all-time high near the 2055 mark. A nice good break above it would could open the door towards higher levels. Quick update on Brent oil. So Brent oil yesterday had a nice push higher, but this is what I was talking about yesterday. So basically, this is a little bit annoying because the commodity drifted higher. It managed to overcome this this barrier, the low of the 6th of March near the 45.20 zone. So that was wonderful. It also overshot the 200-day EMA, but as you can see, it quickly reversed back down. And well, I mean, what it did here is like why it's annoying, because it closed above the 45.20 zone, but stayed below the 200-day EMA. So in a very tight spot here. It's sitting here right now. Again, don't get me wrong, everything's still kind of leaning a little bit more to the upside, but given that we didn't get that really strong confirmation, to be honest, we will be very careful. This morning we're seeing already a test of this 200-day EMA again, but it's failing to move above it. So let's give it a whole day, of course. Let's see if it manages to do so. But if by any chance it starts correcting back down here and ends the day below the 45.20 territory, then, well, I mean, we could maybe go for a bit of a correction here towards this 21-day EMA at least. Bitcoin, quick update here. Not much happening apart from yesterday's little kind of surge here. But still, it didn't really go to the highest point of last week of Sunday, which was around the 12,097 mark. So of course it made its way closer to that area, but didn't really kind of move there. So for now, basically the way we could look at this is we'll probably wait because again, what I don't want to see here is a possible kind of range here forming, because we do understand that sometimes, well, Bitcoin does like to do that after making a good move in either direction, and then it kind of starts consolidating. So again, for now, we'll be very careful. If we get a push above Sunday's high, then yes, then we'll aim for some higher levels. But until kind of then, we're just gonna stick around here and just kind of do nothing and watch it. AUDNZD. So the pair is moving nicely to the upside, so that's good news for the buyers. We can try to draw something like this here, an upside support line, a very steep one, a very tentative one, but nevertheless an upside support line taken from the lowest point of March of this year. And as you can see, the pair is now kind of approaching this barrier right here. And let me just, I'm trying to reuse this this highlighted area here. So the pair is approaching this key resistance level, which is the highest point of June near the 1.0880. In a way, if we look at the bigger picture, of course, we would like to see a break of that area first before, let's say, considering higher levels. But yeah, for now, you can see that from the very short-term perspective, that's the level that we're going to be aiming for, the 1.0880, and then we'll take it from there. If we get a nice daily close above it, then we'll aim for some higher levels, which could potentially kind of, where one of those could be potentially this one right here, the highest point of October of 2018, roughly around the 1.0994 level. But again, we need that confirmation break here first in order to aim for that area. In case this suddenly starts reversing back down, still any move up until this upside line could be considered as a temporary correction before another leg of buying. But yeah, again, for now it's looking quite positive. So let's see how it behaves near the 1.0880 territory. Now, jumping into US dollar against the Canadian dollar, so the pair is drifting nicely to the downside. So this is what I talked about in the beginning of this week. This is the level that I was telling you to keep an eye on, the 1.3314 zone. As you can see, yesterday we had a nice drop below it. This confirmed the lower low. We got a nice daily candle kind of staying below this area as well. So everything's kind of looking quite nice in terms of testing, possibly testing the 1.32 territory right here, marked near the low of the 21st of February. and then of course we'll take it from there, because again we do have a bunch of levels underneath here. For example, this little high, the high of the 9th of January of this year, which is around the 1.3105 zone. But again, the first level to keep in mind is the 1.32 territory. Now the main focus is of course on GBPUSD, which got a boost today, and as you can see it's moving nicely to the upside, and the boost came from the BOE. So the BOE kind of kept the interest rate the same, which to be honest was widely expected. I mean, the BOE continues with its asset purchase program, so they're trying to stimulate the economy, their own economy. So for now, the pound seems to be recovering nicely here, and it's getting closer to the highest point of March near the 1.32 zone. So let's see how it behaves around here. If it breaks above it and we do see a daily candle staying above it, then of course, yes, we will aim for some higher levels. We'll aim for the next kind of potential target here, which is the highest point of December of 2019 near the 1.3515 level. Now jumping into Euro NZD, this one is moving nicely to the upside as well. So the euro is on the stronger side right now, and yep, you can see that this is the result we're having here. So a while ago I talked about Euro NZD, as you can see by the arrow, which has shifted already to the left. I was talking about this barrier here, the 1.7580, or let's round it up to 1.7590, which if gets broken, then yep, it could open the door towards the next potential target here near the 1.7982. And as you can see, it's almost very close to it. So in a way, I would say that this idea has worked out nicely. The pair continues to rise. In a way, for us to consider maybe the downside on this one, we would prefer to maybe wait for a drop below the 1.7590 level first, and then kind of consider a move lower. And however, until then, everything's looking quite positive here for this pair, so it's getting closer to that 1.7982 zone. And finally, EURUSD. So EURUSD is pushing again to the upside. It's getting closer to this 1.1909 zone. So in the beginning of this week, I was telling you guys to keep a close eye on this barrier here. So the 1.1725, which if provides decent support, could help the pair to rebound and move higher. And this is exactly what's happening. So basically, my idea kind of that I talked about in the beginning of this week is working out nicely. We are seeing a nice push higher here. And what I was saying, that initially we'll aim for the 1.1909, which we've got to test. That's perfect. But as you can see, the pair is struggling for now to get above it. So the idea here as well is that if it continues to struggle to push above the 1.1909 zone, we may get a bit of a correction here back down. Maybe the US dollar will start strengthening here. Of course, let's keep an eye on all this. And if we do see this one reversing back down, then maybe we'll be getting ourselves a possible little range here. So something for you guys to kind of keep in mind. This could be the case basically where the pair could drift back down towards that 1.1725 territory. But again, for now, guys, it's just an idea. In order to consider this idea, we would need to see, first of all, the daily candle remaining below this 1.1909 zone and then reversing to the downside. So, well, obviously. But again, for now, keep your eyes on this, guys. It's very interesting. If we get a push above this 1.1909, then, of course, the next target for us is the 1.1996 level marked by the high of the 15th of May. No, sorry. Let me just correct this very quickly, guys. So it's not the 15th, it's going to be the 14th of May of 2018. So yeah, keep your eyes on that level. So guys, I really hope you found it useful. I'll have to wrap it up here. Thank you very much for watching and listening. If you want to catch my video later on, my Traders Tea Time, 13:15 GMT. For now, guys, I hope you have a wonderful trading day. Stay safe, guys, and I'll see you later. Thank you very much, and bye-bye.